All right, welcome back. Welcome back, folks. If you are new to my YouTube channel, welcome to SMC Tao. I hope you like this video. If it does bring value, please like, subscribe, and let's get it. So, this is Monday. This is Monday's trade on the 13th of November 2023, New York AM session. I didn't trade this on my trade of eight, quit your job in 90-day account because it's a Monday and I don't like to trade that account on like days like Mondays, right? It's very risky to get in on the right side of the market. It's hard on Monday for me personally. Of course, like I know some of you guys are killing Mondays and all that, but for me, sometimes Mondays are just not that easy. But this was a very clear textbook setup from the 2022 model, but it does comprise of a few other things that ICT teaches, right? So don't mind these things that I've marked out in my chart just yet. This is the main drawn liquidity for the day that I was anticipating at 8:30, right? So 8:30 came in and price just plummeted to the downside. And I know what you're thinking, right? This liquidity is grabbed with this wick or something. Personally, when I'm trading the 2022 model, daily bias is key, right? I don't care if liquidity is taken on the other side or whatever you want to call it, right? Because when you're from my understanding, the 2022 model is very big on daily buys. If you are not in the same direction as the daily buys, you're most likely not going to make consistent profits when you're trading the 2022 model. But anyway, I was anticipating buys, right? This is Friday's high. I was anticipating Friday's high to be taken. I am bullish on the monthly, and I think you can just see a little bit of my ugly chart drawing. So there's no chart porn over here. You're not gonna see those nice little, tight areas where there's a reversal happening. Like those, you know what I mean, man. There's like that nice, that good-looking order block rejection entry type of thing. You're not gonna see that here. It's messy. This is what I was looking at. This is the monthly fair value gap, and price reacted to this volume imbalance, gave a smart money reversal. This is actually an SMT divergence with the E-mini SMP, and that's why last week I was telling you guys that this is a buy model, a market maker buy model, because we have this little schematic playing out, right? I was telling my friends that that's what I thought was happening. Obviously, I'm not well versed in the idea of market maker model, but I do understand how it works, right? In any case, um, if you look over here, we are bullish. So this was my daily bias. We're going up. I did skip a lot of those. So don't take what I just said as a guide to daily bias. It's not. I do a little bit more research than that. I look into the market a little bit more deeper. I take notes of other things other than the things I just mentioned. So I did not just give you a daily bias breakdown. Do not go into the market expecting to start getting daily bias. Just watch ICT on YouTube. He explains it, and if you don't understand it, there are other YouTubers who explain it as well. But over time, if you just keep practicing it, you will get better at it. For me personally, it took me a few months, like maybe six months, to start seeing consistency in my daily bias. I'm just being honest, like 6 months was the minimum for me. But anyway, I was expecting bulls here. 8:30 opening price. I marked out my time-based liquidity, which was the London low, and then we also have this sell side liquidity here. This is also liquidity, whether you like it or not. This was the Sunday low that it made on the 12th of November. And then the best part about this was that it's below the midnight opening price, right? So midnight was over here. We are basically getting a power of three setup. And you guys remember how the power of three works. We have a scenario like we have, let me just show it here. We have an open, a low, a high, and then close. So this is basically the power of three. If you are bullish, you want to see something like this, right? You want to see an open, a low, a high. So this is now the, let me just highlight it. So in this area, this is where you want to enter your buy, right? And then you want to buy up into that area. You shouldn't worry that it's pushing down. That's why, like, you know, I was terrible at breakout trading. I know some really, really good breakout traders, and they would capitalize on moves like this breakout. They would just catch the sell, take profit. I wouldn't. I would try to take this sell. I would enter here, not be happy with my profits here, and then price reverses, stops me out, lose money, and because I'd be targeting somewhere down here. But anyway, that's not important. I'm just trying to show you guys that I will never discredit any method of trading as long as you are finding profitability with that method. That's all that matters. You shouldn't care what anybody else says. Retail methods, smart money concept, ICT concepts, all of them work. For me personally, I prefer ICT concept because again, it goes back to my way of trading, my way of thinking, and I just wanted to have this kind of logic behind why I'm doing what I'm doing. So anyway, with that being said, we have 9:30, 8:30 opening, right? I'm anticipating buys, so I want to see sell sides taken. And as I wait, I'm on my Discord. I'm chatting with my friends, and we're just going back and forth, talking about the ideas of like how everything's going. Once we get below the sell side on Nasdaq, right? It's below the midnight opening price. I did not want to see a reversal here. I even said it on my Discord. I do not want to see the reversal here. I want to see it below the midnight opening price because this is an added confluence. And when you have an added confluence into a trade, it's basically like it makes it so much easier for you to hold the trade where you think it's gonna go. It makes it easier for you to risk that 1% or that 0.5% instead of guessing, oh, is it gonna go? This was not the right place, right? I didn't want to enter the buy above the midnight opening price. This sell side was not as important to me as the midnight opening price was. It could wick into the midnight opening price and then reverse, and I would have been happy with it. However, it kind of just gave me a very nice little setup here. However, like as you can see, we have this shift, right? This shift here on the 1 minute, it doesn't look as clear, but on the 30 seconds, it does. However, this shift is the one that I was willing to risk on, right? And what I mean by that is this is something I learned from ICT himself as well as some of the guys from the Top Step TV, right? I can't remember who it was, but they mentioned that sometimes at the beginning of your trading day, you just want to throw a little something into the market just to get a feel of what's happening. Where is price going? Is price willing to go in your direction, or does it immediately reject where you want to go, where you want it to go, and it goes against you? So for me, let me look at that 10 handles. For me, this is perfect. $200 plus minus on the Nasdaq, mini Nasdaq. This was fine for me. 220, 240, $50. I was willing to risk this, right? And then I got tagged in. I had my entry here. Unfortunately, I cannot show the execution when I am in market replay. However, this is evidence, right? I know that some of you guys want proof. You can see that that is a trade of 8 account. There's the profit, there's the equity, whatever. So I'm telling you guys the truth. And on the screenshot, you will see there's a buy entry here, immediately gets stopped out, and then there's another buy entry down here which goes into profit, but we'll get to that, right? So I entered the trade here. I'm holding and hoping for the best, and it just goes against me. I'm cool with it, right? I'm out of the position. I realized that this move on the NASDAQ was not the one I wanted to catch because on ES, this liquidity hadn't been taken, right? So the E-mini S&P had not taken the sell side. It was still lagging behind the NASDAQ. And I wanted to see both of them move in the same direction. I didn't want to see one go up while the other one is still pushing lower. Most of the time, that's a signal of fake moves. If Nasdaq is shifting and ES is not shifting, and I know about divergence, but divergence doesn't just work randomly, right? Divergence, S&T divergence works at a specific point in the markets. It doesn't just work at any point in the market. That's why I'm telling you right now that if Nasdaq is making a divergence with the ES, but it's in a random position or in a random place here. Like you look at price, right, and you're looking at the left hand side and you're looking, this is just a random area in the chart. That divergence is most likely not gonna hold. So what I did was I took my loss, and I didn't cry about it or anything. I stayed. I stayed in the market. I was like, I'm gonna hold it. I'm gonna not hold it. I mean, I'm gonna stay here. I'm gonna wait for my trade. So we have this little this fair value gap, right? This fair value gap was important to me because, and I'll show you now what happens after, right? Look at that. Price breaks above it. It becomes an inversion fair value gap. So let me just gap. So this is an inversion fair value gap. Price has to respect it now if we are headed higher. That's why I didn't wait for the shift in market structure. Most of the time, I would wait for the shift, but because we have this inversion fair value gap, I knew, okay, price, excuse me, if price rejects this, we are bullish and we're going up. ES was printing the same thing. ES had taken liquidity, finally caught up with the Nasdaq. There was no S&P divergence, unfortunately, which is fine. I still had my power of three set up. I still had my 930 model set up playing out, my 2022 model playing out. Not mine, but ICT's models. But it's I tested them. I've been learning how to trade them, and yeah. So anyway, we have this displacement, right? We are getting big bullish candles now, and they're closing bullish. And this is like just before the silver bullet hour, as you can see over here. So 10 a.m. between 10 and 11 is the silver bullet, and all of this was happening around the silver bullet. So not only was the 2022 model playing out, not only was the Quit Your Job in 90 Day model playing out, the 2022 model, Quit Your Job in 90 Days, as well as Power of Three and Silver Bullet were all playing out at this point in time. And I knew that, okay, this is something probably worth taking. So I got in, I put my limit order. Let me make this, let me keep it black actually. So I got a little fair value gap inside of the inversion fair value gap. And you guys know me, I like to risk responsibly. I consider myself a risk manager, not not a what do you call it? I think yeah, my stop loss was around here. Not a trader or whatever you guys call trading. I don't know, but yeah. So this was the trade. I had initially my take profit. This is where my take profit is. Low hanging fruit. This is my take profit. But I was expecting price to go up here because if we are bullish, we want to take this high and break into new highs. Hence the eye. This little eye over there. It's not there because of Illuminati. I'm telling you, it's just there because it's a drawn liquidity. Let me put a dollar sign. I feel weird after saying that now. There you go. So this was the drawn liquidity, but this was my low hanging fruit. I wanted to come out of the price out of the charts here around this place. I think it was about $1,000 plus minus profit. Up here, I think it was 1.6. And on a trading combine, you cannot make 50% of your target in a day, right? It's like a consistency rule with Top Step. You cannot close the day with 50% or more of the target. They want to see that you don't get lucky. They want to see that you're consistently making profits to get to the target, and then they will trust you as a trader. But anyway, I wouldn't want to hold the trade up here because it would have made at least close to about 1.6. And so I'm going to leave this here, right? Or let me rather put it here. I think I closed somewhere around here. Yeah, it was about a 125. For me, it was a 125. Originally, it was a 128 or 129. But yeah, so we have the displacement, we have the fair value gap, also the inversion, and we are coming into the silver bullet hour. So I enter my limits. Price is respecting both fair value gap and the inversion. Look at the wicks. These wicks, these rejection wicks, they are showing you that hey, we are respecting these areas and we're about to go higher. And I got in around here, and then I just held the trade all the way up to take profit, right? Now, if you look over here, this little move would have scared me, right? I know that maybe some of you guys are struggling with this, but this little move, it would have scared me shitless. I know I've closed trades because of these moves, and I would have closed here. So back in the day when I see a move like this, I would have closed right there. Right then after this big candle closes, I'm like, oh my god, it's selling, close, I'm out. But trusting your model, having confluences. I have multiple confluences. I've back tested this a lot of times. I have done my daily buyers daily. I have literally tape read, back tested, forward tested, so I was good. We have this little order block, right? Price was coming back to the order block. So if you missed this because you're waiting for the shift in market structure, and what sucks about that shift in market structure is that it doesn't leave much of a fair value gap. It does leave a tiny one here, but price doesn't come back to it. This is your entry on the order block, right? And I would have scaled in here, but I don't do scale ins on combines. If I'm doing a challenge and evaluation, I'm not gonna scale in. I'm not gonna take partials. It's better I just have a set risk to reward ratio, because when you start scaling in and taking partials, you are literally putting yourself in a position where you can end up having a negative risk to reward. And if you have a negative risk to reward on a combine or an evaluation, not only does it take long to pass it, but if you have not done it for over a long period of time, you're going to struggle with keeping your emotions in check, with keeping yourself, with managing yourself, basically. But anyway, this was the move, right? We are already in profit over here, but I want you to come here, shift your attention here. The Bank of England was speaking right here. And this is why I exited this trade around here. I manually closed it. My take profit was up here, but I manually closed it here because I had reasons to close it here, as well as the Bank of England. It was almost um, it was almost this time when I closed it, right? So just watch how price goes, and it goes straight up to where I took profit. But anyway, as I was saying, I know some of you guys are going to say I closed it right here on this candle. When it came back down, I closed it. You guys are probably going to say, hey, this was a low impact news event. Low impact news or not, if it's something like Bank of England, if it's something like those little ones that move GBP or USD, I don't trust them. All right, I do not trust them because just last week, I held a position on ES and I was in profit of about 1,600. And there was a low impact news event, and it literally moved price all the way from being up 20 handles to stopping me out at break even. And that was like so heartbreaking because like I held that position for so long, you know. But anyway, the point is I closed because I don't want to hold a position into this kind of news. Bank of England, I got out. Everything was playing out. Original take profit was up here, and it still got hit. Unfortunately, this is one of those days where the Bank of England or the news events didn't like do some weird shit, you know. But yeah, anyway, guys, I hope you got value from this video. It was just a trade breakdown of Monday's trade. And if you did get value, please hit the like button. Comment down below how you guys are doing in your trading journey, as well as let me know if you want to join my Discord. It's just a bunch of traders who are trying to grow. It's not paid. I'm not charging anything. It's free. I just want like to grow a little community where we can help each other out. I am still a learning trader, and I think some of you could benefit from it. But anyway, like I said, comment down below your experience as well as how your journey is going. If you like the video, please hit the like button. If you are new, hit the subscribe button, and I will see you guys on the next video.